Did you know that home prices in Miami, Tampa, and Orlando surged by 45 to 60% in less than 2 years? That's right, nearly double in some areas. And it's not just a fluke. The market's on fire, and if you're not paying attention, you might miss out on something huge. So what does this mean for you and your investments? Well, if you've been sitting on the sidelines, now's the time to ask yourself, are you in the game, or are you watching from the stands? Because with numbers like these, the stakes have never been higher. Whether you're looking to buy, sell, or just hold, this kind of growth changes everything. The question is, are you ready to make your move? So here's what's happening in Florida right now. Insurance companies are packing up and leaving, and that's bad news for anyone trying to protect their home or car. Why? Because when there's less competition, the companies that stick around can charge whatever they want. And what they want is a lot. We're talking premiums shooting up by as much as 500%. Yeah, you heard that right. 5 times what you were paying just a few years ago. Think about it. If your insurance used to cost you, say, $2,000 a year, now you're looking at $10,000. That's not just a pinch. That's a full-on financial gut punch. For a lot of folks, that kind of jump means tough choices, like cutting back on groceries, skipping vacations, or even putting off repairs just to keep a roof over their heads. And if you can't afford the new rates, well, you're left scrambling for coverage or worse, going without. Either way, it's a lose-lose situation. Let me tell you about the Martinez family in Orlando. Back in 2022, they sold their cozy 3-bedroom home for $650,000. It was a great deal at the time. Buyers were lining up, and the market was hot. Fast forward to today, and that same house is still on the market, listed for $620,000. That's $30,000 less than what the Martinez's got for it, and it's been sitting there for months with no serious offers. This isn't just their story. All over Florida, homeowners who thought they'd cash in on the boom are now watching their properties linger, prices dropping just to attract a buyer. The market shifted, and what was once a seller's dream has turned into a waiting game. Some folks are holding out, hoping things will bounce back. Others are cutting their losses and moving on. But one thing's clear. What worked in 2022 isn't working now. You know, it's not every day you see 250,000 people pack up and leave a place they once called home. But that's exactly what's happening in Florida right now. Families, retirees, young professionals, all heading out, searching for something more affordable. The cost of living down there has skyrocketed, and folks are feeling the pinch in ways they never expected. It's not just a trickle either. This is a full-on exodus, the likes of which we haven't seen before. People are selling their homes, saying goodbye to neighbors, and hitting the road with whatever they can fit in their cars. Some are moving to neighboring states, others are going farther, chasing the dream of a life that doesn't break the bank every month. And it's not just about the money, though. That's a big part of it. It's about the stress, the uncertainty, the feeling that the place you loved isn't the same anymore. Florida's always been a land of sunshine and opportunity, but for too many, that dream is fading fast. So they're leaving, searching for a fresh start somewhere else. And who can blame them? When the cost of staying becomes too much, sometimes the only choice is to go. You know, Florida's insurance market has been in rough shape for a while now, but things really took a turn when Citizens Property Insurance started seeing its numbers skyrocket. Back in 2019, they were handling just under 500,000 policies, already a big chunk of the market. But fast forward to mid-2023, and that number had more than doubled, hitting over 1.3 million policies. Now, why does that matter? Well, Citizens was supposed to be the last resort, the safety net for folks who couldn't get coverage anywhere else. But as private insurers pulled out or jacked up their rates, more and more homeowners had no choice but to turn to Citizens. And that's not just a sign of a struggling market. It's a red flag that the whole system's under serious strain. When the state-backed insurer becomes the go-to option for over 1 million people, you've got to wonder, what happens when the next big storm hits? Because if Citizens can't handle the claims, taxpayers are the ones left holding the bag. And let's be real, Florida's no stranger to hurricanes. So this isn't just about numbers. It's about real people and real risks. You know, folks in Florida are really feeling the pinch these days, especially when it comes to their insurance bills. Premiums have shot up by 30 to 50%. And that's not just a little bump, it's a massive jump. We're talking about some homeowners now paying over $18,000 a year just to keep their policies active. Can you imagine? That's like adding another mortgage payment on top of everything else. For a lot of families, this isn't just an inconvenience. It's a real financial burden, making it harder to keep a roof over their heads. And with costs climbing this fast, it's no wonder people are starting to worry about what comes next. For the first time in decades, Florida's seeing something unusual. More people packing up and leaving than moving in. That's right, in the first half of 2024, the Sunshine State actually lost residents instead of gaining them. And that's got a lot of folks worried, especially when it comes to the economy. You see, Florida's always been a magnet for people looking for warm weather, no state income tax, and a lower cost of living. But lately, things like rising insurance costs, housing prices that just won't quit climbing, and even some of those
The United States has officially crossed a staggering $35 trillion in national debt.
The workers,
Japan's
fewer
government
consumers,
wants families
and
to
ultimately,
move out of
less
the
money
crowded
flowing through the
capital
state.
Tokyo and has
And
significantly
it's not just about the
boosted
numbers. It's about what those numbers mean. Businesses rely on a growing population to keep things humming.
Japan is having
If
fewer
people keep
babies
leaving,
than
well, that
ever
could mean
before.
slower growth.
Here's a
fewer
shocking
jobs,
revelation.
and even a
The
hit
U.S.
to things like
government's debt
property
burden is
values.
on the brink of surpassing
It's a trend
Italy's
that's
and
got
Greece's for the
economists
first
and
time.
lawmakers
The U.S.
paying close
government's debt
attention,
burden is
because
set
if it
to
keeps
surpass
up,
Italy's,
Florida might
according
have to
to
rethink
IMF
how it
figures.
keeps its appeal.
Mark,
You know, it's strange driving through Florida these days, where there used to be the constant hum of construction, the clatter of hammers, and the rumble of trucks. Now there's just quiet. Empty lots sit untouched. Half-finished buildings stand like skeletons against the sky. And the workers, well, a lot of them are just waiting for the call that isn't coming. Building permits? They're down by half compared to last year. That's not just a number on a page. It's jobs put on hold, paychecks that aren't coming, and families trying to figure out how to make ends meet. And it's not just the workers feeling the pinch. When construction slows, it ripples out. Hardware stores see fewer customers, truck drivers have fewer deliveries, and local businesses that rely on those paychecks start to struggle too. Economic growth doesn't just happen. It's built, quite literally, one project at a time. And right now, Florida's building a lot less than it used to. The question is, how long can this last before the foundation starts to crack? You know, when you think about the housing market, Florida might not be the first place that comes to mind as a financial risk. But here's the thing. Florida holds nearly 12% of all outstanding residential mortgages in the U.S. That's a huge chunk, and it's not just a local issue. It's a
Every
national
politician
concern because if
promises to
something goes
fix the
wrong there,
debt.
the ripple
Every
effects could
economist
spread
warns
far and
about the
wide.
deficit. Every
Imagine
new
if home prices take a hit or foreclosures start climbing. With that much of the mortgage market tied up in one state,
Get ready
the whole
for a
financial
financial
system could
eye-opener.
feel the strain.
The-
Banks, investors, even everyday homeowners across the country could get caught in the fallout. It's like having too many eggs in one basket. If that basket tips, everyone's breakfast is at risk. And it's not just about the numbers. Florida's real estate market is unique. Tourism, retirees, climate risks, all these factors play into it. So when we talk about financial stability, we can't ignore what's happening down there. It's a reminder that even sunny skies can't always protect us from the storms brewing beneath the surface. You know, putting all your eggs in one basket can be risky. That's why spreading out your investments is such a smart move. When you diversify, you're not just relying on one market or one type of asset to carry you through. Think about it. If one area takes a hit, others might still be doing well, balancing things out. And hey, it's not just about stocks. There are other stable markets out there, like bonds or real estate, that can add some solid ground to your portfolio. The key is to find the right mix for you, something that matches your goals and your comfort level with risk. Now, I'm not saying you have to figure this all out on your own. That's what financial advisors are for. They've got the expertise to help you explore your options and make a plan that works for you. So take that step. Reach out to someone who can guide you. It's one of the best ways to protect what you've worked so hard for. So, you're sitting across from your financial advisor, a cup of coffee in hand, and you're ready to talk numbers. She leans in and says, "All right, let's break this down. First, we need to look at your goals, short-term and long-term. Are we talking about saving for a house in 5 years? Or are we planning for retirement in 25? You nod, thinking about the future. Both,
We have
really.
30-year bonds up
I
for
want to
auction.
make
That was a
sure I'm
little less
covered on
fun.
all
Rick
fronts.
Santelli is tracking the action.
Great,
And Rick, it was a little
she says,
soggy.
pulling up a chart. For the short term, we might want to look at something stable, like a high-yield savings account, or maybe some bonds. They won't give you huge returns, but they're safe, and you'll have access to your money when you need
Take
it.
a look at the bond market
Makes
this
sense,
morning.
you say.
Right now, it looks like the 10-year
Now,
is at
for the long
4.45.
term,
The 2-year
that's where things get interesting. We can talk about stocks, mutual funds, even some real estate options if you're feeling adventurous. The market's always a bit of a roller coaster, but historically, it trends upward over time. You take a sip of coffee. What about risk? I don't want to lose everything if the market crashes. She smiles. That's why we
दिवाली खत्म,
diversify.
गोल्ड खत्म।
Spread your
क्या ये
investments
सच्ची हो
across
चुका
different
है?
areas, so
गोल्ड
if
ने
one
पिछले
takes
2
a
दिन
hit,
के
the
अंदर
others can balance
बहुत
it
मैसिव
out. And remember, time is your best friend here. The longer your money's in the market, the more it can grow.
दोस्तों आप लोग दिवाली की
You
छुट्टी
leave
पर
the
क्या
meeting
गए
feeling a
पूरा
little
गेम ही
lighter,
बदल
a
चुका
little
है
more in
पहली बात तो
control.
यहाँ
It's not about getting rich quick. It's about making smart choices now so you can breathe easier later.